What's going on, you guys? Wanted to take a quick second and look back to one of the trades I took, I believe last week, um, which was October 29th. Wanted to share it with you. It was a pretty fabulous trade. Lots of great things to be learned in it. It was a risk of 8.25 points to make a 77.75 points. Perfect trade, in my opinion. Damn near it. And if you've seen my other videos, you absolutely can do this yourself. So I just want to kind of walk you through it, reiterate some points so that, this coming week, next week, and so forth, that you can absolutely execute these on your own. We are in replay mode, full transparency. Okay, it is currently not October 29th, it is November 4th. So bear with me and understand that this is replay mode. What we're going to do to set this up, and I think I already did it wrong, we're going to go back to what candle is that? 9:30 candle? 9:22 candle. So we're basically going to treat this as, pre-market analysis coming into the day, what we're looking for, and start fresh, right? Do this every morning with the group, start a live stream around 9 to 9:15, depends on what I'm doing. And we'll run through some pre-market, share my thoughts, and then execute once market opens. So we're just going to basically remake that. And yeah, pretty much. If you guys watched the liquidity video, I'm pretty sure I cover that my first thing I like to do coming into a morning session is mark out all relevant liquidity. That's going to be typically session highs and lows. So this indicator that I just turned on makes it so I can see different sessions. As you guys know, I like to mark out London high, London low, Asia low, and Asia high. In this scenario, since it's in the orange, both of the highs, that is London and Asia highs. They actually happen to be in the same spot. So I do like marking those out. And then I will also mark out some lower time frame liquidity. That's not session high or low, but rather just relevant liquidity that I like to have on my charts. So those would be those 2 points in this scenario. And then maybe I'll even grab this closing New York bell, right? So this is typically what I do, and I'll grab these highs as well. It's relevant. Right, so I mark out liquidity. I like to see it, like to have it on my chart to carry on through the day. I do this every morning. I highly advise you guys to do it. Now, step 2 is I like to go to the higher time frames. Oh, it's spoiling it for you guys. Whoops, whatever. Like to go to the higher time frames, kind of get a good read on this market at this point, with no context of that candle that totally didn't just show up. I don't have any context other than we're in an uptrend. Okay, right? If you look beyond the scalp up, move higher, downtrend, higher retracement, higher retracement, higher retracement. So in my eyes, we are still going higher. I'm still going to imagine that, okay, we're in an uptrend. Let's trade with the trend until we get a reason not to. I also do see this kind of being accumulation, right? From this low to this high, we're accumulating, manipulating. One of the session liquidities is going to be key relevant for me. That's really what's going to be the initiation of me being interested in the trade. Whether it be to the low, so if we swap London lows, I'm going to be interested in maybe a long higher, or if we come up here, maybe look for either continuation or something else out of this retracement on the higher time frames, right? So with that said, let's put it on the 5-minute and let's get to work. It's probably going to move pretty quick, so let's do 5 candles per second and pray I time it right, aka composite right. Okay, bingo. I did that decently fast. So right here, it is now, let's turn the indicator off, 35 minutes market into market open. And we have seen that we just manipulated London and Asia highs, right? That is a liquidity sweep all day long. We have not manipulated any of the lows. We arguably did tap back into this fair value gap, but I don't really see that as relevant. So yeah, really the only thing that's changed is we have now manipulated the highs and found nice selling off of it out of that liquidity and a push lower. At this point, the next thing you do when you see a liquidity sweep is you start to add in the building blocks, okay? If you've seen that video, there's primarily 4 types of building blocks. That's fair value gap, order blocks, volume imbalance, and equilibrium, okay? So just like in that video, I believe in that video, we have most important to least important, and most important was fair value gaps. So we're going to mark out some of these in the 1 minute. And there's our one right there. All right, that's a baby one. We'll count it though. It's only fair. Okay. So there you go. You have your 3 fair value gaps. Let me hit another candle. I just want to make sure. Okay, yeah. Should be the low. Ignore that. I just want to make sure I had the low. Call this out. Okay, cool. So if you remember about equilibrium, to disclose and find out which fair value gap we would want to pay attention to, we are looking for the ones in the discounted area. Discounted area would be anything over the 0.5 of the leg. This one, in my eyes, is not over 0.5. I mean, you can say the top of it is. Not interested. Do not care. So it leaves me 2, a baby one and the big one. Okay. I am now looking for a retracement, something like this, maybe up into either this one or up into this one to look for an entry to short, right? Why? Because we've had a liquidity sweep and a manipulation of a session liquidity, which has given me a direction after the impulse move. Okay. Step 1, liquidity sweep. Step 2, impulse move. Both of those are checked off. Step 3 is a retracement to a building block. Okay. Right now, fair value gap trumps, that's number 1. That's the most important, most relevant out of the building blocks. And we have found 2 that are considered valid. So now we are going to watch for price to retrace up to them. And then once we get there, we can see what happens. I'm going to slow it down. I mean, I know what happens transparently. Okay, so look right here. We did create a liquidity sweep here. Just continues my idea of, okay, it's 1 minute, it's nothing major, but it continues my thesis of the retracement is to come. Nothing severe yet. I remember there's a point in this that it got pretty nasty. Yeah, I think it was like right here. Because you're looking at it, I see a head and shoulders, right? Shoulder, head, shoulder. I remember this point. It was right around this point actually, and real time, where I was fearful that I wouldn't get the trade, and that it would basically take off without me. There is this right here, this kind of baseline of this flag, if you want to call it. And one of my ideas is if we start to break under it, am I going to miss out on the trade? And if I'm correct, the next candle I think melts it. Oh, maybe not. I know there's a point that it does melt down. Okay, there it is. I guess not. I thought it melted down. Cool. Anyway, now we have the retracement. Okay, so here is the leg lower, the impulse move. Here is the retracement to a building block that we have up here. So far, so good. All first 3 steps have been checked. Liquidity sweep, impulse move, retracement to building block. Okay, what's step 4? Now this, I kind of did break step 4, I'm not gonna lie. You're technically meant to wait for a break of structure out of the lower time frame uptrend, the retracement. What that would be is a break beyond that low, right? In a perfect world, you would want price to come down, close here, you enter here, and then you target liquidity. You absolutely can. And something I like to say to the people that hang out with me during the day is right now, you have the best risk to reward. You are currently only risking, if you entered exactly there, 10 points. That's almost exactly 10 points, I think. You're risking 10 points, right? But you may have a lower probability of the trade working out in your favor. If you want a higher probability, you're going to have to risk 2x, basically, but you have a higher probability of the trade working out. This is where it comes down to personal preference, intuition, some market experience, or if you're just trading with me, I'll kind of walk you guys through what I'm thinking. For me, I entered at the top, transparently. My exact entry was 303.5. So I have it pulled up on the side screen. Can I get it? 303.5. Change this to green and we'll make it nice and fat. I think this was the candle I entered on transparently. Actually, and I changed my mind. What we're going to do is this. If I can grab the exact point. There we go. My stop would have been at the top of this. And my target is going to be opposing liquidity. Okay, opposing liquidity meaning opposite liquidity, right? If we're, you know, I guess opposite liquidity might not be the best word, but we're looking for liquidity in the direction we're trading, right? So if we zoom out a little bit, liquidity there, let's get rid of this from being so fat, let's make it skinny. We have some there, right? All of this is just kind of baby liquidity. The biggest, meanest liquidity is London lows. I think, yeah, this should be London lows, right? Why? Because that is just the session liquidity. It's, if you watch the video, you know that that is more important than, especially 1 minute liquidity. It's more important than all of this liquidity right here, roughly. Probably except this and this, in my humble opinion. So there's your trade setup, if you trade like me. And if you don't, well, if you rather wait for the more risk, more underlying risk, but a higher probability, we'll pause and show that entry as well. So at this point, I'm simply accepting my 9 points of risk. And yeah, we click the button. Boom. So right there, it's up to you if you want to enter or not. If you do enter, your stop still has to be in the same place as mine. You still have to be risking, what is that? 312 right there, right? You still have to be risking 312, but your entry's down here. So you are currently in drawdown. However, if I remember correctly, yeah, this candle just gives it right back. Or you enter here, somewhere on the breakdown again. Now your entry's even lower, and you're still eating more underlying risk. Your stop still has to be up there, in my opinion. Because even if we retrace back higher, it doesn't invalidate the trade, does it? No. It only invalidates the trade if we break beyond said fair value gap, right? And if it doesn't, then it's still valid, and you're just going to get stopped out, right? Either way, let's say you're in. Now, once you're in the trade, it's all about risk management and managing the trade. Your take profit's already set, 226. And you have other liquidities, right? 265, 254, 244 as other potential spots to watch. We're just going to hit play. Still, so far, so good, right? No reason to panic. Okay, so first take profit. Oh, wow, just nailed it in the next candle. Whoops. But yeah, your first take profit there, right? So if you were in micros, you could absolutely scale out. If you're in multiple minis, scale out, do what you want to do. At this point, by the time you hit the first liquidity mark, 0.65.25, your stop loss should not be where it was. Like you should never have to take a risk here. At the bare minimum, your stop needs to be in profit enough to cover commissions, right? That's something I like to do just so I'm not actually red on the day. It might be like plus $60, plus $20, plus whatever. But there's no reason you should have risk on this trade at all. It's so far a great trade, right? What I like to do is, if you look, you have different structures on the 1 minute chart. So you have structure 1, structure 2, and then right now we have an extension. So my guess, and I don't really remember, but there should be another structure to be formed here, right? Because you have extension, retracement, extension, retracement, extension. So right now we are on the extension phase. My stop is going to be above that structure. Okay, we're using the red line just to visibly note it because I can't go down with that, right? Now we click the button again. And by the way, like there's all take profits were there, right? So take profit, take profit, take profit. All of this liquidity you can now get rid of. I'm going to leave that one because it's a pretty clear sweep. Click the button. Let's see. Okay. There it is again. So this point, now my stop is going to be even further down. I believe I was already out of this trade right around there. Hold on, let me pull it up. I don't want to give you guys false information. It doesn't tell me where I put my stop. Okay, no, so I was still in this trade. All right, cool. So at this point, my guess is either it was here or there, top of this structure at some point, right? Let's put it in the medium. It says 225 was my exit price. Let's keep watching. All right, so we're still good. At this point, in my opinion, if you wanted to move your stop up after that move higher, you absolutely could. Like, right, you could move it up, right? Okay, still chilling. I'm trying to pause it on time. There it is. And there's your trade, right? So up to we manipulated one session high, we target the other, right? Now there's still Asia down there at 167, but you know, I think it was FOMC day this day as well, if I'm not mistaken. So yeah, exit was 225 right there. So yeah, I mean, it's really that simple. And no matter where you entered, even if you waited for the break of structure, you know, the A++ move and trade setup, you still have a great trade. Even if you took profit at this liquidity or this liquidity or this liquidity, as long as you have proper risk to reward, right? So instead of, you know, risking 20 points to make 19 points, you're risking 20 points to make 40 points, 20 points to make 60 points. As long as you're risking proper, still a great trade, right? So pretty simple. Just to recap it again. We have session liquidity. This is Asia and London. Bell rings, we come up, we manipulate the high and have an impulse move lower, right? The reactionary move. Step 1, step 2. Step 3 is wait for the retracement to some sort of building block. In this situation, we have a clear fair value gap that checks the equilibrium, you know, process of elimination. We have all that fun stuff. We got to move back to it. We respect the fair value gap. And then we have the sharp move lower that then takes out all liquidity. Now, if this is FOMC day, I think we do end up taking out Asia, and you could have maintained it. I'm trying to remember if it is. Let's see. But you could have maintained the position without hitting your stop. I think even if it was like right there, and been straight. But, you know, I look at it and I go, okay, I made a nice buck. Everything was great. Nah, yeah, you would have gotten stopped out right there. Because this is FOMC. Yeah, there it is. Boom. Right. And this is a clear example, actually, of how you can use session liquidity. So if we got rid of all the white lines and just session liquidity, you can see how we manipulated every single one. Asia lows, London lows, Asia and London highs. All got swept at some point. Now, not to say every day is going to be that way, but there it is. So really, really not complex. Pretty simple. If all of this was just like a different language to you, it's probably because you haven't watched my other videos. I strongly recommend you watch the other videos if you have any interest in taking a trade like that. And if you want to risk 10 points to make 77 or whatever the math was, yeah, watch the other videos, get a feel for things, you know, then come back to this one, rewatch it, watch the building block video. That's like a 45-minute long video. Just put it on 2x speed, genuinely. Put it on 2x speed, just rip through it. And all of this will make a ton of sense. And then I promise you, you'll probably be able to do this yourself. It's really not complex. If you still can't do it, find me in the Discord. I mean, seriously, just tag me, DM me, do whatever. Here to help. So, yeah, pretty simple. Either way, hope you guys have a good Tuesday night. And, yeah, see you.